Okay, alright. Hello everyone, welcome back. This is Fike from the black box. Sorry for the light, it is a little dim. You can't even see me. So today in this video I'll show you how to find a setup and enter a trade. Okay, if we find an amazing setup, we'll be entering a trade. Okay, what you can see here is GJ, GBP, JPY. As you can see, it has been consolidating around here. So this could have been an amazing trade. As you can see, as they delivered it to the upper part, and now as always it is coming to the consolidation. It's coming back, right? Here another great trade right there. TP hit beautifully. Another great trade right there. Break and retest, boom. That was amazing. And it is everywhere. I can't stop finding a setup. It's everywhere. Okay, it's everywhere. So I have seen the other ones, they don't have any consolidations at all, so we don't have any trade. Let us go to dollar yen. Next, these are my lists. Okay, these are all available currencies that I trade. Right, these all are the available currencies that I trade. As you can see, dollar yen has broken out of the consolidation, making a single fake out. Okay, making a single fake out. So this is a nice buy. This was a nice buy. If we had seen it, if we had seen this thing, this could have been a nice buy. This is because this is a single fake out. This is the third model of the black box, because this thing this week, as you can see, it broke it. Okay, it obliterated this resistance area. So the market is now bullish because a structure is broken. Huge structure right there, a huge consolidation broke on the upside. So, and we already delivered the fake out. Okay, the fake one, the single fake out. Okay, this is the third model, right? If you are wondering if this was a nice trade, of course this was a nice trade. Right here, 1 2 3. I already told you we need 3 candles. Okay, whatever time frame you are, if the candles are trading sideways, 3 candles trading sideways, then that is a valid consolidation. You can mark it the highs and the lows. As you can see, you can mark it right there, up there, not down here, so up there. So it broke with this one. It could have entered, not this one, I'm sorry, this one, this candle could have entered the sell right there. Okay, so it's delivered, the TP is hit, so your 70% is out, and now delivered to your stop loss, so you will be out of the trade. Don't worry, you are in profit, so you don't even care. You don't even care. Next, what happened was that this and now delivered the downside, making a fake out, filling this weekend gap, this imbalance, and wicks. I told you wicks will be filled just like this one. The market came back and filled it. Wick right there, filled it right there, so it can't be left bare. It can't be empty. Okay, it has to be filled. So this is a nice single fake out, third model. So all we want is a support right here. When the market comes here, and when we say rejection, we will be entering. Okay, we will be entering. If we don't see any rejection, and if it blows past here and breaks this lower band, this lower consolidation, then we can safely say that this is a double fake out. This is a double fake out. This could be a double fake out. Okay, but I don't think this will come down. This will find a support and will go up. Okay, we will continue going up because we have already consolidated a lot around here. The yen pairs, the JPY pairs, all of them, Euro yen, CAD yen, Pound yen, Chef yen, Kiwi yen, all of them have consolidated around here. So it's time to break out of this prison. So we got no trade already passed. The trade has already passed right here. Let us go to Euro yen. So this is how you filter out trades. Okay, as you can see, nice trade like the GJ one. This one had a nice consolidation around it. So it's beautiful. You connect this one, you connect this side, and you wait for the break, and it delivered to the TP, to your TP. So that's nice trade. That could have been nice trade. Let us see Cardian next. Cardian, another consolidation. There we go on both ways. Downside, you could have won 70% of your trade, your TP. I mean, 20% of your profit would be out when TP1 is hit. I already told you that. Don't forget. Don't ever forget. Then you let the other 30% run and you trail your stop. Don't forget this one too. This is key. These two risk management points, if you let them go and if you forget about them, you will pay. You will pay. If you had sold right here because the market broke down, and look what it did, it instantly reversed direction and came down, came up to your stop loss and hit your stop loss and get you out of the trade. If the worst case scenario, if you didn't place a stop loss, then this all bullish run could have eaten your money. Okay, so these two TP placements and trailing stop losses have a key factor in this strategy. This strategy is perfect. You don't need anything, but you have to practice these two key factors. So they are simple. They are simple. A 16-year-old can understand this one, right? It's very simple, right? So this would have been great in both ways. Beautiful. In both ways, beautifully executed. So in this way, you can trail your stops. When the market goes up, you bring it up there where you entered, and you don't touch, and let it move up, and you trail a little bit up, and let it move up. Don't touch. Right? Let it move up because your stop loss is above your entry point, so you don't have to worry if it retraces and hits your stop loss, right? Because you are already in profit. So that is how you manipulate the market. The market has been manipulating us since the beginning of time, since the beginning of trading, right? So we have been losing money. This is enough. It is time that we get our victory back. Okay, we get our victory back. So nice trade right there. Let me visualize it for you. You don't get any simpler than this. This was beautiful. This was beautiful. I have no other idea. I have no other thing to say. This was beautiful. Come back here. Another beautiful trade right there. It is everywhere and it is amazing. Let's come here. This is another consolidation. Nice trade right there. It's executed so upside. Boom. And when it breaks down, you sell because the lower band is broken. So now you sell. Boom. It obliterated everything. The structures, the laws, all gone. We don't even care about that. All we have to do is practice our risk management and know our setups. We have 4 models that we need to consider, and when those happen, we take a trade. Okay, when one thing doesn't happen, the next one is probably gonna happen. So we will take action on that. Okay, and that is how we're gonna make money. So you can see here, there was a beautiful trade right here too. Amazing. This was beautiful as you can see it. So this seems like some kind of a little poke right there, a little poke. So when these kinds of things happen, so there is nothing you can do, because after piercing this one, the market didn't move much, but it returned to your stop loss, right? Your stop loss is hit now. What you gonna do now? You enter a buy. You enter a buy. You got your money back, your losses because of this fake out, and an additional profit, right? You got an additional profit because you know your setup. If you, most people who do not know this thing will assume that once their stop loss is hit, they will go out and cry their eyes out because they don't know what is happening. They think that the market is out there to kill, to eat their money. They think that the market knows their name. The market knows their family. The market knows where they they place their stop loss. They think that the market deliberately comes back to take out their stop. No, that is not what is happening. You are entering on a random place and you assume that you're gonna win. No, that's not gonna happen. Believe it, that will not happen. Even computers, even AI couldn't figure out this market. This market is dynamic like hell. It is freaking changing every second. You cannot determine the next move. You cannot possibly know exactly where the market will retrace. No way. There is no strategy that knows that. But these kinds of strategies, like the black box, have a close precision, accuracy, close to 90%. As you can see here, close to 90%. This is beautiful. Your entry is exactly at the point when it breaks. What the hell do you want more than this? More than this exact entry? Not supply and demand zone, no trend line breakout, no indicator can tell you the exact entry. They all tell you after the market has reversed direction or did some damage. Okay, so please, I'm telling you, I am telling you, just go back on the charts, go back and see years before, in 2019, in 2018, in 2017, in 2015, in 2010, in 2009, in 2005. What happened? See what happened. Look what the market did. It did exactly what the black box is predicting, what exactly the black box is showing you. Every time the market accumulates, every time the market moves away from that equilibrium point, from that equilibrium position, there has to be some kind of deviation. You have to go somewhere and then come back if you want to come back to that equilibrium position. Because this position, this line is best for both the sellers and the buyers. That is why they are settling here. If the buyers were strong, this thing will blow out like this one. Right here, the buyers were strong and the sellers got no equal force at all. They have no equal amount of force. That's why the buyers are very strong and pushed it out. Right? But before that, both were moving up and down around a specific point. That is what we want. That's what we want. So Exactly. So our setup revolves around here, there, there, and there. We do not enter here. We do not enter there. We do not enter there. We do not enter there. These are where our profits will be running, not where we take a trade. No, no, no. These places are we take the trade. These places are the ones that we take the trade, right? These are the places that we take the trade. TP hit, boom, and broke to the downside, you sell, boom. It is more than the TP executed beautifully. It is just you don't want anything more than this. You don't want any. Trust me. Trust me. If you wanna mess around indicators, supply and demand, uh, candlestick patterns, or these patterns, double top, double bottoms, just go and do it, and you will thank me later. You will thank me for saving you time and money and resources. I'm sorry. Okay, so all I'm saying is just let us find another trade setup, okay, and we will close the video because it is simple. It doesn't take 2 years to understand this thing. It doesn't take it doesn't take 10 years to understand this thing. It is not like the ICT concepts or smart money concepts. As you can see, if you have been following him, he is still teaching, and it never ends. It never ends. He has one setup, and he has another setup, and he has another setup, and he adds another setup, and it keeps going, and it keeps adding another name, adding unique names and unique names, and that just confuses you. Okay? So, unlike me, I am telling you the exact things that you need to do. In 2 minutes, stop. In 2 minutes, stop, you will find your setup. If there is no setup, just pass. Pass it. Pass it. Why would you want to throw your money out in the markets? Why would you want to lose money without knowing what you are doing? What the hell is wrong with you? I regret that I did that before and I lost money. I deposited and I will blow it next time. I deposited and 2 days later my money is gone. I deposited and 1 week later and my money is gone. I tried everything. Indicators, MACDs, stochastics, RSIs, alligators, momentum indicators, and whatever indicator you can imagine. Fractals, and I did everything, including ICT concepts, smart money concepts, including marking out the levels, institutional levels. Yeah, they have their own effects, but I don't want to mess around with them. I have been practicing them for months and they didn't make any difference. I could some handful of trades could play out, but I don't know what I'm doing. I don't know where the market is going. I don't know next what the market is doing. What it is gonna do, where to put my stop loss, where to put my take profit, how to measure the TP, how to use the Fibonacci on that particular strategy. It is all blurry and I didn't have any idea what to do with that strategy, and it was hell, believe me, it was hell. Now, thank God I found this. Thank God the black box is my savior. I'm telling you, please, I'm begging you. I'm not getting anything from you. If you use it, it is for your own benefit. It's not for me. If you use it, you use it. If you don't, just use some other some other strategies, and you will understand what I'm talking about after you lose some good money, right? So some people want to learn the hard way, so do it if you want to do that. Okay. Anyways, we can trade in here on Kiwi dollar because as you can see, there are long wicks. These long wicks, I don't like this kinds of things, and this is not a consolidation at all. Okay, this candle, if it turns out to be bullish, then I could mark it, but in this case there is nothing here. So, and this is not great. The whole thing, as you can see, it seems like some kind of double fake out. Okay, if you go to the daily time frame, you know what I'm talking about. You will know what I'm talking about. As you can see, nice consolidation rise there, nice sell boom, and nice consolidation there, nice buy rise there, boom, TP hit, and now came back. Okay, if it breaks down, then this is really the double fake out in play. Okay, that is the only explanation that will happen right here. But if it retraces up, then it is still consolidating, and as you can see here, we are making equal highs right there. Okay, so the consolidation could extend up there, so the market could come up there and come down and come up there again and come down, come up there again, come down, and after that it will break out of this thing, as you can see here, right? This is what it did. The highest high is that one, you mark that. So you filter out fake breakouts. Okay, but in this case what you're gonna do is you mark this thing like this one. So in this case you don't mark this one, you don't you don't do it like this. No, that is not how it is done. You have to find equal highs, even if it is a wick or even if it is a body. You have to find equal highs, not this one. Okay, you have to do it like this. This is the equal lows, right? One single red candle, bullish candle, green candle, another red candle, then it broke out. That is where you enter the sale. It doesn't matter if it retraces. We don't even care. Why? Because it will not go up to your stop loss. It will not. This is a daily time frame, so I'm talking for the swing traders, not the intraday traders. Okay, if you want to trade within a day, then this is not for you. But to determine your next direction, to determine when will the next market move will be, you can just frame your idea right here. But if you want to get in and get out within a day, then this you don't consider the consolidations on the higher time frames like the monthly. Okay, I do these kinds of higher time frame consolidations to find the next breakout. Okay, once you find that breakout, when you enter a trade, you are in the higher time frame trend, right? The trend is your friend, right? When the consolidation forms in the lower time frames, you will be entering a sell because the trend is now bearish right here. When I'm talking about lower time frame, I'm talking about the 2 hours, not below that. I already told you that don't trade it, this thing on the 5 minute, don't trade it on the 1 minute. Okay, because the broker will eat your money. For every trade you enter, you will pay a commission. For every trade you wait, you will pay the swaps. For every trade, you will pay the commission. So when you are in the 1 minute, the consolidation is everywhere and you enter a trade there, and another consolidation after 10 minutes and you enter a buy there, another consolidation 15 minutes and you enter a sell there. The commission will eat you alive. So why would you want to do that when there is a higher time frame like the 2 hour? The 2 hour will give you the whole picture, okay? Then when that thing breaks out, you will enter a sell. When that trend moves, it will not stop, just like this one, okay? It will burst down, but breaking every lows and then reaching, hitting your TP, and your peep, the peep will be higher because you are on the higher time frames, right? Let's measure this one. This is a daily time frame. As you can see, the peep is 125. 125 right here, okay? 125, it is respectable because in a single day the market, on average, the market gives you 30 to 40 pips, right? Sometimes 50 pips, okay? So when you divide, this is a 3-day trading, right? 3-day trading, when you divide 125 by 3, what do you get? It is around 42, right? 41, 40, 42, yeah, 42 pip. Each day has given you 42 pip. That is huge. That is huge. Don't get me wrong. If you enter the sale right there, then that is a huge amount of pip and you hit your TP. Just measure your TP from there and then up there. That is it. You don't have to do anything. As you can see, TP2 is hit, TP3 never hit, so we don't even care about that. We are trailing our stop losses. If it goes more further, then we make more money. If it doesn't, then we have our trailing stop loss. So everything is on our side. That is what you want, right? Yeah, excellent. Excellent. As you can see, this consolidation, you can mark it just like this one. Okay, on the daily. We are not trading on the daily, but it is for the idea, just an idea, right? So this is how you mark it, okay? This is how you mark it. If it breaks down, then we can assume that this thing is a double fake out. Then we can safely enter a sale. Safely, I'm telling you. If it breaks down and breaks this loss, then it will come back to here, okay? To possibly the loss. That is all. Let's come back to the 2 hour and find our trade before the time runs out. This is QE dollar or NZD USD. Let's see Aussie dollar. I'm using OANDA, not FXCM, because OANDA matches with MetaTrader. Okay, the MetaTrader chart. As you can see, it is still consolidating on the 2 hour. We got no trade because it is trending. It moved up clean and it moved down clean, so we have no trade. Just pass it like you didn't see it. You didn't see it. You can analyze the higher time frames, but I don't want to do that now. It's Euro Aussie. As you can see, Euro Aussie had given us a nice trade right there. This was a great trade. That one, not this one. That one was a great trade right there, but it moved up. Right, another trade right there, beautiful. I told you we need 3 or more candles. So when I say 3 or more candles, it is like this one, okay? It is like this one. So if the market hadn't returned back and if it collapsed down, then we assume that that is not a consolidation because it is only 2 candles. It is only 2 candles. But the market retraced back and made another candle and stacked it up. It compressed it. There is a lot of orders in here being compressed and waiting for the breakout. So that's where we participate, right? So this could have been a great one. This could have been a great one. Amazing. Nice trade right there. Nice trade right there in both ways. Beautiful execution right there. It's beautiful. And as you can see here, boom, boom. Nice trade right there. Boom. Right there. TP hit. Beautiful trade. So I'm telling you, it's everywhere. It's everywhere. Everywhere you look, the black box is there. Everywhere you look, the black box is there. Look at here. Look at this one. Your TP is hit. Boom. Okay. And the downside, another trade. Where the hell, what kind of strategy gives you this kind of trade setups every single day? No strategy can give you this kinds of setup. You will get one setup in a day, and that is a loss. That is a loss. Okay. No trade already passed Eurosi. If we were 2 hours earlier, then this could have been a nice buy. Okay, we could have bought this one. This thing. Let's go to pound Aussie. I'm sorry, pound Aussie. GBP AUD. Again on under. It is the same thing. They are the same thing. Okay. In this case, so as you can see, I have placed an alarm right there. If it breaks out, then I'm entering a buy because I'll show you the reason. Let's come to the higher time frames, shall we? On the daily. So isn't this beautiful? Isn't this amazing right here? Look down here. Beautiful. It was it was beautiful. It doesn't get any cleaner than this. This is the first model, and I love the first model like a piece of cake, it's like that. And look at this one and look at this one. What do you see? The same thing, right? So that's what I'm waiting for. That is what I'm waiting for. As you can see, we are on a support. As you can see, we are on a support. If the market breaks down, I don't think this will continue down because this is a huge support zone. All I want is a break to the upside. Okay. Is it a daily time frame? Once it breaks the upside, I am entering a buy. I am entering a buy. That's why I have placed a TP. An alarm right here on TradingView. So what could be your next TP? I will wait until TP3 is hit. Okay, this is a consolidation, right? So around this 9700, 97,000, right there. These highs are the target right there. So I'll get out right here. That's a huge, huge peep. That is huge. Let's measure it. Let's measure it, shall we? From here to there, 9700, 97,000. That is 353 pips. 353 pips. Simply just identifying the consolidation. This is just amazing. This is just amazing. And we'll see about this. We'll make a lot of money. I'll show you on the next video. On the next Monday or Tuesday, this will break out. But not today because today is Friday and market will close soon after 5 hours or something. So I don't think this will accelerate to the upside anymore. So as you can see on the higher time frame, on the daily, we have been bouncing off this thing. Let's go to the weekly. So you can see that the black box model is unique. It is everywhere. It is common everywhere. It's common. Let us see this one. As you can see, what do you see here? A consolidation. It is everywhere, baby. And so what happened? It broke the downside. You said, boom. Your TP is hit beautifully. Just measure this thing. Just measure it. Come down here. Put it down here. Right there. That is your TP, right? What do you want more than this? What the hell do you want more than this, people? What the hell do you want more than this? And let us measure the pips. That is a whopping